Ready for the news of the day. I hope you're ready. Done some work on this, working together with my Valuation Masterclass Bootcamp students who are kicking butt. And let's get into the news of the day. The stories are a U.S. ban on Chinese fleet, Brexit hurting the U.K. service income, a meaty Russian cyber attack, cities don't want natural gas, states do, Japanese can travel to EU, Brits can't, China fighting off currency strength, and less powerful oil exporters hurt. Before we get into it, remember, you can ask your questions in the chat. I'm happy to answer any questions that you bring out. Now, before we get started, I thought, yesterday I went through the movements in the market and what we saw in the month of May. I thought that today would be a good time to look at the valuation of markets. So let's get started by looking at valuation by region. Here I look at the world valuation, which is at 19.2 EPS, 2.7 times price to book, 13 times cash flow, and 2% dividend yield. What you can see is that developed markets tend to be the most expensive markets, where emerging markets are much cheaper on almost every measure. In particular, I would point out the price to book of emerging markets at about 1.9 versus almost 3 for the developed markets. Part of this has to do with emerging markets having less debt and therefore more equity, and equity is book value. So a couple of things. US is still highest at about 22.5 times PE and 4.3 times price to book. Now, part of the reason why price to book is so high in the US is because the tech companies have a very, they tend to be less asset heavy. So they have less heavy of an asset base. So generally they would have less equity, but also the return on equities are so high in those companies right now that we are seeing valuations be very high. Now you can also see that emerging Europe is damn cheap and has a massively high dividend, but it's hard to access. We'll look at that in just a second when I look at countries. And finally, if you look at the line that says developed, non-US, 17, 1.8, 10.3, and 2.8, basically all I'm doing is say, what if we remove the US from the developed markets? What would the rest of them look like? And you can see that they're basically on a price to book basis, they'd be at 1.8 versus about 4. So the US is basically double. So when we think about the markets, I would say the US is where the valuation is high, not developed markets around the world. And we know emerging markets are relatively cheap. Let's now go valuation by country. So what I've done here, again, like I did yesterday, is I ranked these countries by their market capitalization and average daily turnover. And here we can see the US obviously is the biggest market. We know globally the US weight in any global index is about 57% right now. And we can see that the US, India, and Netherlands are most expensive. But of course, in the US, you've been getting super high returns. Now, this doesn't talk about fundamentals. Tomorrow, we'll look at that. Also, the UK is super cheap, and Korea seems to always be cheap from my experience. So Korea is cheap, but chances are it's going to possibly remain cheap. And then Japan's actually looking kind of interesting at a 1.4 times price to book. All right, finally, let's look at the valuation by sector. The first thing you're going to see is energy and banks are the cheapest. I mean, basically banks have been flying and so they've been moving, but they're still relatively cheap. It's important to remember, and this is an important point, banks are always cheap. What do I mean by that? We know that banks, number one, they're highly regulated. They operate on a sliver of equity compared to a typical company. So they almost always trade at low PEs, low price to book, and the like. So sometimes they run, but the point is they never get super expensive. So if we look at the average PE for the world, it's 19.2 and banks are at 11. So you could say, oh my gosh, Andrew, that 11 is going to go up to 19. No, it never will. Banks never re-rate to that level. Also, we can see that consumer discretionary and infotech sectors are the most expensive. This gives you a little breakdown of what's happening across the world with valuations. Let's get into the news of the day. The first one, U.S. bans imports from Chinese fishing fleet over forced labor allegations. and this is by investing.com. The U.S. Customs Department proposed a new import ban on Dalian Ocean, a Chinese fishing company which it accused of using forced labor. This action marks the first time for the Customs Department to ban imports of an entire fleet as opposed to an individual vessel. And also, Chinese Foreign Minister Wang Wenbin claims that accusations of forced labor in the fleet were completely groundless. This recent import ban could lead to more sanctions, especially it could be escalating the already tense relationship between the U.S. and China. Now, the truth is once you get up to this high level of fighting, basically, between countries like this, it's so hard to know the truth, so hard to know the truth. You know, on the one hand, the U.S. is alleging something. It would have to be investigated. But, you know, even if it was happening, I suspect that no country would allow another country to investigate it and then turn up guilty. So that's the biggest problem. And, you know, what happens is politicians just lead us to war. And if there's one lesson I've learned in my whole life, it is that people don't want war. You know, I traveled to many countries across the world and I visited many different people. And when I went to visit individual people at their homes, in the farms, in the factories, and places that I've been, I learned that people want to get along. They do not want to fight. Even people who are living on borders don't want to fight with each other. They want to trade. It's politicians that cause fighting and war. And I mention it because the only way that we can stop politicians is when people stand up and demand better from them. And that's not often going to happen. And that's part of the reason why one of my predictions for the next few years is war. Next, Financial Times tells us that Brexit shrank UK services exports by 110 billion. And let's take a look at that for a moment. Researchers projected that UK services could have grown had the UK not voted to leave the EU. UK services exports from 2016 to 2019 were about 113 billion pounds lower as a result of Brexit. And, you know, one of the big exports of the UK is intellectual property and the like and services. So they are getting hurt. And the relocation of financial services from the UK to EU nations was done really to allow trade, you know, seamlessly to happen with clients that are in Europe. Now, of course, this is hitting the UK economy, and it could also be hitting the share price as well as the currency, the pound. But I think you also have to be careful. As I always say to my students, be careful about the bias behind any writer. Of course, we know that kind of the elites within the UK voted against Brexit, and it was a lot of, let's say, the working class that voted for Brexit. So would the academics be from the working class or from the elites? Probably from the elites. So they may just be propping up, you know, what is their feeling at this moment. So let's move on to the next story. This one's from Bloomberg. All of JBS's U.S. beef plants were forced shut by a cyber attack. What's this about? Well, another cyber attack. This caused JBS to shut down some of their operation in Australia, Canada, and all of their beef plants in the U.S. U.S. governments believe that the attack originated from a criminal group based in Russia. So here we go, Russia, 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 Russia. And that's basically been the mantra in the U.S. is everything is Russia's fault. Now, that doesn't mean it's not. It could be. But obviously, if there's one lesson we've learned in the last 5 or so years is be careful when people jump to conclusions. Now, here we can see that JBS basically has about 23% of the American beef market, so it's a massive supplier. And devastating hacks in the U.S. are often blamed on Russian-based hackers. Last April, the U.S. imposed sanctions on Russia tech companies and charged Russian intelligence officers with strings of cyber attacks. This could lead to new sanctions and further strain the relationship between the two countries. It's been unbelievable watching 5 or 6 years of beating on Russia in every possible way. Now, I'm not here saying that I'm a Russia fan and that they haven't deserved it, but at some point, the human race has to try to tell politicians to start to work together rather than making enemies of the big players around the world. All right, Wall Street Journal next. Battle brews over banning natural gas to homes. So homes and businesses account for about 13% of U.S. greenhouse gas emission. Cities have proposed measures to ban the use of fossil fuels in new homes, but states have responded by outlawing these bans. So this is really a conflict between city and states. Biden's $1.7 billion infrastructure plan calls for less reliance on fossil fuels. Maybe some of these states will reconsider this situation. But very interesting. This last night I was reading about revolutions, communist revolutions, and generally what happened. Let's just look at Cambodia as an example. What we saw was that the Khmer Rouge, when they took over, they moved everybody out of the city. And these were kind of the city elites that were in the cities. And so oftentimes what happens is you have a rural group of workers and peasants, let's say in the past, that are working the land, go after the city elites. Now, what's very fascinating right now is the divide between Democrats and Republicans. Democrats control the cities. Republicans control most of the states. That's fascinating because here it could be that the revolution that surrounds those cities is actually not the communists. It'll be the capitalists that surround the cities in the U.S., which brings me to another point. If there is to be a war, a civil war in the U.S., and you'll see all of these books up here, all of them and above are from my reading on the U.S. Civil War. The U.S. Civil War was a North-South war, the southern states fighting the northern states. But if we go into a civil war at some point in the U.S., I suspect it's going to be rural versus cities. Now, let's continue on. EU to add Japan to safe travel lists and leave the UK off for now. That's a snub there related to what? Brexit? Let's see. EU is expected to lift the ban on Japanese non-essential traveling. Travelers from the UK will still be left out due to the ongoing spread of the Indian COVID-19 variant in the nation. Now, just recently, I was looking at the numbers for India and seeing the number of cases falling and the number of deaths falling, and that's very, very good news. Now, there's some medicines that have been used in India that are not used in other countries that has been speculated as being part of the reason for that. So it's kind of interesting to see that variant causing more damage to the UK possibly than it does India. All right, so there's a travel bubble concept between the EU and Japan, and it will benefit industries in travel and tourism. With the EU continuing to lift the travel ban, it's a positive factor for oil. That's on 6 countries. Investors could look at the oil and tourism sectors as they might be ready for a comeback. All right, next story. China moves to rein in yuan rally as exports weaken. The People's Bank of China said it will raise the foreign currency reserves by 5%. This will add about $20 billion to the existing $1 trillion in foreign currency reserves. This is because the government sees the strong yuan as a deterrent for its exports. Exports are a key component, of course, for China, and they've outlined that in their 5-year plan. As China increases its foreign currency reserves, this would decrease the Chinese yuan and benefit labor-intensive exporters. Let's look at that for a moment because I think it's an important thing. In this case, what I would say is that the U.S. dollar is weakening. We just looked at the currency yesterday, and it has been weak over the last 12 months, and I think that the U.S. dollar is going to continue to weaken. The result of that is that the Chinese currency, the euro, and other major currencies, the yen, probably will be strengthening relative to the U.S. dollar as the U.S. dollar weakens. So is it yuan strength or is it U.S. dollar weakness? Well, it's kind of one and the same. But the point that I would make is that what the Chinese are trying to do is get rid of their own currency, increase the supply of their currency, and use that proceeds of that to then put into foreign currency. But they're also trying to reduce their amount of foreign currency, meaning US dollar, that they own. So they're caught in a pretty difficult situation. But it is possible that that buying goes into other currencies, not the US dollar. So we could see some more strength in those cases. But generally, what I would expect is that the Chinese yuan will be rising in value over the next couple of years, while the US dollar correspondingly falls. Let's look at the last story of the day. Rapid energy transition could doom oil exporting countries. Western governments are pushing oil companies to net zero earlier than 2050. BlackRock has been using its influence to push oil companies to cut emissions. This could have unintended consequences for vulnerable oil exporters like Iraq, Libya, Venezuela, Nigeria. These countries are vulnerable. And these vulnerable oil exporting countries could eventually face declining foreign investment as demand for oil shifts to renewables. Wealthy nations such as Saudi Arabia could attract more FDI as it shifts to renewables. And this could cause these vulnerable oil exporting nations to reduce oil exports, leading to trade deficits. Now, let's see if we've got any questions for the day. All right, first question of the day. First question, Munling says, you previously mentioned that politicians behind the Biden administration seem to be pushing for war. Why is war beneficial for them? First of all, the reason why it's beneficial is it supports their narrative. The narrative was, when Trump came into the office, it was Russia that was trying to undermine American democracy. At one point, there was accusation that the U.S., that Trump actually colluded with Russia to win the presidency. So it's very important for their narrative to show that Russia is the bad country doing the bad thing. The second thing is that there's a large number of people in the State Department, as well as in many, many departments in the U.S. government, who believe that they have a moral right or a moral obligation to stand up for whatever it is that they think is good for the world. Now, on the one hand, you can say, well, it's important that we have, human rights and all of those things. I agree. But the other point is that, to what extent are you willing to bust into your neighbor's house when they're not doing what you want them to do? Well, the people behind the Biden administration, I would argue, and many of the bureaucrats in Washington would be comfortable to bust in just about any situation. And they have the military to do it, which brings me to the third point. Where do these politicians and where is the money coming from to support the billions of dollars of politicians, and others? Well, the defense industry. The defense industry is a huge, probably the biggest lobbyist in Washington, and they are lobbying constantly for more spending and more war. I even saw recently that there was a news article that said that the U.S. Department of Defense is nervous to cut the contract with any of their defense contracts because they're afraid that they're going to be sued for not fulfilling the terms of that agreement. Basically, you could interpret that as, if you stop war, we're going to sue you and force you to restart it so that you can buy our products. There's no other country in the world that has such a massive, armaments industry. So that's a big factor. All right. Dong says, do trade war and sanctions concerns push gold and commodity prices? I would say yes. I mean, anything that's just putting tension and uncertainty in the world generally will push gold. Now, commodity is different. Commodity is related more to supply and demand, and sanctions could say, well, that will reduce the supply of materials. So I would say generally yes, especially gold. All right, next question. Could this cyber attack lead to discussions or even changes to giant meat companies' unfairly leveraged power over farmers and consumer? Probably not. Probably not. I would suspect that, everybody talks about stakeholders in America, but the truth is that a lot of these big companies are really pressuring smaller suppliers. So I don't expect any big change there. All right, next question. Which currency do you think China will pick for their main reserve? I believe that China is probably going to pick the euro. They have a closer relationship with European countries than they do right now with the U.S. So I think that that's probably a place that they could go, and that could mean more euro strength. All right. Why would wealthy oil exports attract more FDI if it moves to renewables? That's probably because Ravi wrote that. No, just kidding. But so the point is that the FDI could be going into renewables. That could be the point. Renewables are expensive, and so there could be a lot of spending there. So next, Manling says, so could China increase spending in foreign currency be counterproductive? Now, it's important to remember that they're not increasing spending in foreign currency. What they're doing is they're basically trying to put more of their currency out into the market and exchange that for some foreign currency, let's say EU, and then they're going to hold that EU as a foreign reserve. So it's not going to be spending. So I don't think it will be counterproductive, but I just think it's going to be hard for China to cause their currency to devalue by that much. And I think that they're going to constantly face the pressure of their currency rising. If the currency is rising, if the Chinese currency is rising, and we know that labor costs are rising in China, what you could see is that eventually over the next couple of years, Chinese products just get more and more expensive. That's why I also think that there's a great opportunity in America to bring a lot of industries back and try to rebuild the manufacturing base. All right, great questions for the day, and I hope you have a fantastic day.